Good afternoon, everyone. This is Edward Goski from Twitter and also from StockTwits. This is where you can follow me on my StockTwits account, and I mostly publish on both Twitter and StockTwits. So I've been wanting to do these screencasts for quite some time, but I have a lot of interest outside of the financial markets, mostly NHL, hockey, and NFL football. So my main passion in life is the markets, and a lot of people have been pushing me to make videos and screencasts for quite a long time. So I thought I would throw my hat into the ring and let's see how far we can take it. So I'm just going to do a real quick video today because, like I said, I don't have a lot of time during the day to do these videos because I spend most of my time researching and going through hundreds of charts every day looking for my preferred setups, which are mostly cup and handle patterns, triangles, Elliott wave setups, mostly wave 3 and wave 5 setups, which is why I've been focusing on gold and silver since 2003. So I have been publishing stock market research since 2003. Uh, and I've mostly been publishing on Twitter for probably the last 7 years or so. So hopefully you all enjoyed the screencast, and going forward, I'll be trying to publish more consistently on YouTube. But if you want to find out what I'm doing on a daily basis, definitely you can check my Twitter account. And as soon as I post charts on Twitter, I usually post it simultaneously also on StockTwits, which is a great social media platform for traders to share information. So what I'm going to do is just go through a couple of charts, and then if you have any questions, just comment below, and definitely hit the subscribe button and notifications on YouTube when you want to be notified of any new videos that I publish. So let's get started here. So basically, we'll look at gold first. So this was my big picture that I posted on March 17th. So basically what you see here is a huge cup and handle forming on GLD, which is just a proxy for the physical metal gold itself. So you can see a huge cup and handle setting up here. Here's the handle going here into the end of the year. And what you have is also what's called a fractal cup and handle. So it's a smaller cup and handle here setting up, and what we're looking for is a break above 129.52, and more ideally is you would want to break above 131.15 here. So once we break above that level, it'll be much more convincing, obviously, and a lot of the precious metal stocks that I follow, the silver and gold stocks, will really start to outperform at that point, and you'll be able to have a nice stop right under here. If we do break out over 31.15, ideally your stop will be pretty close. So we've been waiting for quite some time for this setup. A lot of the reason why I really like gold and silver itself is because when they do set up in bull markets, and I've been through two of them, 2003 to 2007, and then 2009 into 2011, the patterns are very, very clean, very crisp, and the setups are quite clear. The precious metals market is the people that are involved are obviously very passionate. And I mean, the silver bugs and the gold bugs get a lot of flack, obviously. And there's a lot of haters out there for the gold and silver community. But in a bull market, there's really no other asset class, probably other than recently in the last few years, crypto, but because that's full of a lot of people that haven't been around a long time. And it's just a lot of, I wouldn't say gamblers, obviously, but it's a more passionate, the participants are more passionate, obviously. So you get these really emotional swings, and that's what sets up these really crisp patterns. So you really want to be involved in markets that are quite emotional, and silver specifically, and then gold, obviously. In a bull market, you'll see really crisp, clear patterns, and that's what we're starting to see. So you just have to be patient with the moves here. So this is another chart of silver right here from Chris Kimball. And you can see the triangle forming here. It's very clean. And it got rejected again, obviously, today. But what we were looking for here is a break above 1750. So there's no need to rush in. I prefer scaling in myself. You don't need to go all in, because when this thing moves, when it eventually does get over 21, I mean, it's going to run really hard. It's going to trigger a lot of buy stops, and there's plenty of time. I don't day trade, obviously. I am more of a swing trader. I've made most of my money in gold and silver stocks and options back in 2003 to 2007, and then '09 to 2011 by holding for 3, 4, 5 months when you get into a real big bull move. So it's worth the wait. It takes a lot of patience, but when you've been through a couple gold and silver bull markets, you'll realize what the profits are definitely. It's worth your time to be patient and let these setups sort of form, and then when you start seeing these setups break out, it's definitely good to participate in that. So this is a great chart here, obviously, like I was saying. Another one that I posted today, this is a precious metals mining stock. So Wheaton Precious Metals. This is a multi-year weekly chart that I just posted this morning. You can see a huge triangle here setting up, and inside, getting close to the apex of the triangle, is a cup and handle pattern. So these are the kind of patterns that I specifically look for. And it's almost forming a fractal cup and handle right here, where the breakout that I'm looking for is over 2840. So 2841 would be the long trigger. So there's no need to rush in here. It's in the low 27s right now. So it's got maybe a couple more weeks of getting closer to the apex before it breaks out. So it's actually holding up quite well considering what the physical metal is doing today. And that's one, the last thing I'll say is there's a huge difference between the people that actually trade the physical metal and actually trade the stocks. Jim Dines, who's one of my mentors, basically in his book, The Invisible Crash, he talks about how the two markets are separated. The different people trade the stocks and the commodities. Obviously, you can trade both, but there's plenty of times in the history of the metals where you'll have, like today, silver is down like 3%, and some of the stocks are actually up. Some of them are down only 1%. So that's encouraging, but you just have to really wait and see for actually silver to get over $17 and $18. There's no need to worry as long as you're not over leveraging yourself. So here's some more charts of silver here. This one was by Peter Brandt today. So you can see it's still inside the triangle. There's no need to panic or anything like that. Obviously, I tend to layer in my positions. So I don't have any physical silver right now. I'm just waiting for it to get over 1750. And then once it gets over 18, I mean, the pattern is going to be quite clear, and we'll be off to the races at that point. So here's another chart of silver. And all of these people that I'm retweeting and showing to my followers, I encourage all of you to follow them as well. I respect them all very highly. They've all published very good work that overlaps mine. So that one's a good one there. It's very similar to Peter Brandt's. And this will be the last one that I'll show you today about silver. So this is a long-term chart going back to 2004. You can see the huge triangle that's starting to form here, starting from back in 2013. And it's also head and shoulders bullish bottom reversal setting up in silver also. So there's multiple bullish setups setting up within the complex of silver itself. Not only do you have the triangle and the head and shoulders bullish bottom reversal, but from an Elliott wave perspective, you've got wave 1 here, wave 2 here, and once it breaks over 20 or 21, that'll be a wave 3 confirmation, and we'll be off to the races to test 26 and 28. So you hear all the people out there talking about, $100 silver, but let's go to over 21 first. So thanks for listening. Hit the subscribe button, and I'll talk to you again later.